Good afternoon, good morning, good evening, whatever your time zone is today. Welcome everyone to this AGSIW program. We have a live and a virtual audience today, and we're very happy with our panel. The discussion today is going to focus on Oman's economy. The starting point will be the International Monetary Fund's 2023 Article 4 staff report. The panelists will look at the forces that have shaped Oman's economy in recent years and assess how well Oman has emerged from a period of economic vulnerability. The panel will also review the government's current Vision 2040 reform agenda and its policy priorities for reducing reliance on hydrocarbons growth and bolstering prospects for non-hydrocarbon growth going forward. We've got a stellar panel of experts today to cover these issues. I'd like to introduce them now. First is Cesar Serra. Cesar is Mission Chief for Oman at the International Monetary Fund. He's got extensive experience geographically across the Caribbean, Central America, Eastern Europe, and the Middle East, covering a wide range of economic issues, including macro-financial and macro-fiscal issues, debt sustainability, and restructuring and sovereign debt crises issues. He also has extensive experience pre-IMF at the Inter-American Development Bank. Cesar, welcome. Justin Alexander is Director of Khalij Economics and a GCC Analyst for GlobalSource Partners. He's been visiting the Gulf for a quarter century, and that includes 7 years living and working in Qatar as an advisor there in the banking sector and with the government. Justin primarily advises investors and governments on the Gulf, but he occasionally writes for others, including AGSIW, and we're very fortunate to have him as a contributor on our website and also as a participant in our programs. Justin, delighted to have you as well. Tim Callen is our moderator today. Very fortunate to have Tim. He's a visiting fellow with us at AGSIW, and he's former assistant director in the Middle East and Central Asia Department at the IMF. And he was the IMF's mission chief for Saudi Arabia and chief of the Gulf Cooperation Council Countries Division from 2012 to 2021. He was responsible for the IMF's engagement with the government of Saudi Arabia and for the IMF's research and publications on that country all this time. So extensive experience from all of our panelists, a great set of issues to get into. Tim, I'm going to turn it over to you now, and thank you for taking this.
Thank you very much, Ambassador, and let me add my welcome to everybody here in the room and those joining us online. This is a great opportunity to discuss Oman. I think it's a country where a lot is happening, but it's often in the shadow of Saudi Arabia and UAE in terms of the reform experience it's undergoing. So the IMF report, this is the third year of publication of the IMF Article 4 report, which I think has quickly become a go-to source of information for, sort of on economics and economic analysis for the Oman economy. The last few years, Oman's followed a very impressive reform path, which has addressed, particularly on the fiscal side, I think many of the previous concerns about fiscal vulnerabilities and sustainability. And it's begun to impact and influence reforms to try and spur economic diversification. But questions remain both about the sustainability of the fiscal and if government spending isn't going to grow like it's done in the past, what is going to be the new sources of growth for the economy? And then I think there's also the question of, with reforms going on in many areas in the Gulf, how does Oman fit into that bigger reform picture? So, as the Ambassador said, we have a great panel here to discuss that. I'm first going to give the floor to Cesar to outline the main findings in the IMF report, and then we'll turn to Justin to give his views on both on the report and more broadly on the economy. So, over to you, Cesar.
Thank you very much, Tim. It's a pleasure to be here. Thank you, Ambassador, for the kind words, and thank you, Justin, for joining the discussion. Oman, as you mentioned, Tim, has emerged from an extensive set of vulnerabilities, and it's a fascinating story that merits some attention and understanding and discussion of what really has been done. And I think it's important to set the stage of the discussion on where was really Oman by the end of 2020. By the end of 2020, Oman was facing significant vulnerabilities. Non-hydrocarbon growth had been contracting for 3 years in a row. Fiscal deficits were in double digits for many years, on average 10% of GDP during 2014-2020. Central government debt went all the way up to 70% of GDP in 2020 from less than 5% in 2014. And the non-hydrocarbon primary deficit, which is a key metric to understand the fiscal dynamics, was close to 40% of non-hydrocarbon GDP. Sovereign credit was downgraded massively from investment grade position to below investment grade position, and sovereign spreads were far away and much higher than the average EM and the average GCC countries. So that was the picture really by the end of 2020. How Oman reacted to those vulnerabilities. Oman embarked, as Tim mentioned, on a broad-based path of reforms underpinned by Oman Vision 2040. And let me tell you some of the key elements that were implemented since 2020. A key element of the performance of the past year has been the medium-term fiscal framework that was launched in 2020, primarily targeting to improve the size and also the diversification of revenues, fiscal revenues in the economy, but also rationalizing what in the past was very difficult to reduce, primary current expenditures. So that's one key element that was implemented during this past year. The second element was proactive debt management. Clearly, we've seen 2 years in a row of different debt management liability operations that have been able to prepay, buy back, repay extensive amounts of debt that have been significantly reducing vulnerabilities and expanding the policy space. At the same time, PFM reforms have been implemented or are being implemented. Clearly, one important one is cash management with the ongoing work on the Treasury single account, but also importantly with digitalization measures, primarily on procurement. Now, on procurement, the adoption of e-tendering for all procurement processes is there, and which is helping reduce transaction costs, but also preventing any leakages of expenditures. Important to the reform efforts was the overhaul of the SOE sector, and I will talk a bit more about that in a moment, as well as different business environment reforms, particularly the foreign capital investment law that help relax restrictions on foreign investment, streamline registration and licensing procedures for foreign investors, and level the playing field between foreigners and domestic people. Recently, in 2023, new key elements that were passed and will support the process ahead were the laws on the new social protection and labor laws. These are key elements that will help strengthen not only the non-contributory aspects of social protection, but also the contributory aspects with significant positive impact in the sustainability of the pension fund, support labor market mobility and flexibility, support female labor force participation, and in general improve the working conditions in the economy. And finally, one key element that is ongoing too are the extensive green investments in the economy, both in renewable energy, but also on the different enablers that are needed to build the hydrogen economy based on a clear hydrogen strategy put together in the country. That's what has been done so far and has been critical to deliver some changes. What are those changes that we have seen so far? Well, what we have seen so far is that there has been an acceleration of non-hydrocarbon growth. And I think it's important to highlight that this acceleration in non-hydrocarbon growth is happening at the time when capital expenditures, investment from the public sector, both at the central government level but also at the SOE level, has been trending down since 2021 continuously until 2023. So what we are seeing really in terms of the acceleration of non-hydrocarbon growth is really driven by private investment. And the numbers hide a little bit some of the underlying trends, because one key sector that is being restructured is the construction sector. The construction sector was primarily driven in the past by public investment. Now public investment is trending down. There is some restructuring of the construction sector, and that's why it's weighing down on the overall non-hydrocarbon growth numbers. If we were to remove the construction sector from the headline numbers, we will be seeing that actually non-hydrocarbon growth has been growing in the range of 4 to 6% in 2021, 2022, and 2023 until the third quarter where data is available. So this is really new, and this is something that we highlight in the report, and especially compared to the past where we saw significant correlation of non-hydrocarbon growth with government spending and especially public investment. But that's not anymore the case. It's a new dynamic that is actually underpinning the emergence of the non-hydrocarbon economy in Oman. As you know, also a significant success in the recent years has been keeping inflation low, but of course it has come at a fiscal cost, given the need to bring back some of the subsidies that in the past were already eliminated, especially I'm talking about on a cap on petroleum prices. But it's clear that what we have seen since 2020 is that fiscal policy have moved away from the procyclical fiscal policies of the past. And when we look at a key metric for us, which is the non-hydrocarbon primary deficit, as percentage of the non-hydrocarbon GDP, and we see its evolution from 2020 to 2023, we see an important adjustment, which is about 10 percentage points of non-hydrocarbon GDP, which is important and is broad-based, supported by reductions in subsidies, by a rationalization of the wage bill, and also by some rationalization and efficiency gains in the management of capital expenditures. Just to say, because this is a source of confusion, that given some reforms moving away the oil and gas expenditure from the budget, this 10% of GDP adjustment is excluding any developments related to oil and gas expenditure. So it's really genuine related to current and capital expenditures out of the hydrocarbon sector. Some additional elements that are important to highlight, which is the SOE reform. As I mentioned, back in 2020, late 2020, the sovereign wealth fund was created, the Oman Investment Authority. Now, the Oman Investment Authority was tasked not only in continuing managing the liquid part of the portfolio of the sovereign wealth fund, but inherited 160 SOEs that were managed in different ways, with no risk management, with no planning, and no integration between any of them, facilitating the future creation of potential holdings. So the Oman Investment Authority has moved into a comprehensive reform effort in which we have seen improved SOE governance with the adoption of a code of governance. We have seen improved performance in key SOEs, and this is for the first time I want to highlight that in our report, in our selected issues papers, we do have data showing how the performance of the top SOEs have improved over the last years at the SOE level, which is something unique in the region. And what we have seen is that actually the top SOEs have improved performance with the exception of one, which has been deeply affected by the pandemic, which is Oman Air. But again, the adoption of the code of governance, audited performance assessment, risk mitigation policies, a divestment plan and deleveraging activities have started to show some results. And we've seen that SOE debt has reduced from about 40% of GDP in 2021 to 30% in 2023, and that there is an ongoing plan to continue divesting assets, as of now, about 20 assets worth about $5 billion through 2026. Again, this is a key element of the overall package, showing that the action in terms of moving ahead with reforms is not just about the central government, but also the different elements around the public sector. And SOE reform continues to be an important element. What are the markets saying about all these successes? Well, we've seen continuous improvements in the sovereign credit of Oman. It has been upgraded just one notch below investment grade. But when we see sovereign spreads, we see that actually Oman is trading at investment grade. And right now is, compared to where I started in 2020, right now Oman is way below the average for emerging markets and exactly at the average for the GCC region, which again is a testament of all the work that has been done. But clearly, this is not the end of the story. More needs to be done to be able to reduce a key vulnerability of Oman, which is the continued reliance on hydrocarbons and the need to continue bolstering prospects for the non-hydrocarbon economy. The outlook is favorable. In the near term, it will remain subdued because primarily due to oil production cuts. But there are some developments that are expected to offset some of these weaknesses, primarily the coming on stream of gas production, Block 10, that is going to expand gas production by 15% over the next 3 years. But then also the Dokkum refinery, which is coming on stream in 2024. So these are two elements that are going to offset the weakness coming from the cuts in oil production. But also importantly, and I would say primarily what we are looking at is our expectations with respect to non-hydrocarbon growth. And we see non-hydrocarbon growth continue expanding and supporting growth over the medium term. In terms of fiscal and current account balances, given the current trends in future markets for oil prices, we continue seeing surpluses over the medium term. Of course, trending down alongside oil prices, but still in comfortable positions. The key question is how to see the fiscal moving forward, and how do we see what are the key metrics that can guide fiscal policy in the years ahead. And in the report, what we discuss is that we think that there are two key elements that should guide a fiscal policy. Clearly, continue working on entrenching fiscal sustainability, and the other element on ensuring intergenerational equity, preserving sovereign wealth in per capita terms over the years ahead. And for that, what we see is the need to target a debt ratio of about 30% of GDP, and we can comment more about why 30% of GDP later on. But most importantly, reducing the non-hydrocarbon primary deficit. While it has been reduced continuously since 2014, and as I mentioned before, 10 percentage points of non-hydrocarbon GDP in the last 3 years, there is still more work to be done. How this is going to be done? Well, when we look at the fiscal accounts, we see that while there has been some improvement in diversifying revenues, and I'm referring primarily non-hydrocarbon revenues, the improvement have been relatively limited. When we talk about tax revenues, we only see an improvement of 2% of non-hydrocarbon GDP from 2015 to 2022. And clearly, in terms of tax revenues, the collection in Oman is well below some other countries in the GCC. So the question is why, and why it can be done. And when we look, for example, at VAT, we see that what is collected now is about 40% of the potential. No? And you may recall that VAT, it just started in 2021. So this is still evolving. And one element to understand perhaps why the potential, why collections are so low with respect to the potential is because the registered taxpayers are still a fraction of what it can be actually secure. No? When we see the corporate income tax registry and compare with the VAT one is 15–20% of the other one. So it signals that tax administration has been evolving, but it needs to be modernized, and it needs to be put in a way that can actually deliver what it can do given the tax policy that Oman has at this moment. So this is an element that we've been discussing with the authorities, and we are very happy that they are embarking on a tax administration reform plan that over the next 4 years that primarily will try to target these deficiencies, including by rolling out VAT invoicing, e-invoicing, that can help with the information and also the compliance of VAT revenues. But also what they want to look at is at how finding ways to reduce compliance costs, and especially for the middle to lower segment of enterprises in the country. Another element that is on discussion that you may be aware is the PIT law for high income earners. This has been delayed, but is right now at the highest level discussing the specifics of the law, while the IT system that is needed to implement is moving ahead and is being developed. In addition to mobilizing non-hydrocarbon revenues, a key element that we highlight in the report is phasing out subsidies. This is a reform that has started, and it was already in the medium-term fiscal plan, but it's moving gradually through 2030, when it's the expectation that most of the, especially electricity subsidies, will be fully phased out. No? We see a space to accelerate the phase out of these subsidies, especially taking into account that now there is a comprehensive institution with the task of providing social assistance, and that can be actually leveraged to protect those that can be impacted by an accelerated phasing out of subsidies. Let me move away from the fiscal consolidation aspects and focus more on what are the frameworks that are needed to support and preserve this fiscal consolidation that have been achieved so far, but also what is expected to be done over the years ahead. No? Clearly, the medium-term fiscal plan that was adopted in 2020 has been instrumental, but it can be strengthened. And there are different elements in how it can be enhanced. Let me mention three. The first one is that it needs to adopt clear fiscal targets. If you see the medium-term fiscal plan that was launched in 2020, in one year and a half, the targets that they were incorporated in the report were already updated. It was targeting 60% of debt to GDP ratio by 2040. We're already now at below 36% of GDP. We see the need to, again, adopt specific fiscal targets, use those specific fiscal targets to impose clear binding expenditure constraints to be able to guide the budget process, but also to have a transparent process to be able to update and adopt any new version of the medium-term fiscal plan going forward. This is key to be able to build from the successes of the medium-term fiscal plan into a full-fledged medium-term fiscal plan. Let me perhaps move to the structural component of the agenda. As equally important to develop frameworks and enhancing the frameworks, I mentioned on the fiscal Similar work is also ongoing on the monetary side, and we can discuss more of that later on if needed. What is also key is moving ahead with the diversification agenda. And this is subject to a set of different reforms spread across different institutions in Oman, that all of them are trying to enhance the capacity of the country to diversify in different sectors. No? We see some improvements. If we, for example, compare what is the level of non-hydrocarbon exports in total exports now compared to early 20s, we have seen an increase of 20 percentage points. No? Back in early 20s, non-hydrocarbon exports as fraction of total exports was only 20%. The latest preliminary numbers are around 40%. That's significant improvement, signaling the direction of that diversification agenda, but more needs to be done. And the authorities are working on different enablers to be able to generate such diversification. One important to highlight are the different investments that are being executed through the Sovereign Wealth Fund. But let me highlight one important point in how these are being executed, that the Sovereign Wealth Fund, Oman Investment Authority, cannot take a stake of more than 20% in each of these investments. So it's a joint partnership with the private sector, with a push that the private sector is the one driving those investments. So this is an important difference with respect to the past. Another key element moving ahead are green investments, and we have specific information in the report on how, as of now, investment commitments have already been secured to be able to reach 20% of the energy matrix by 2030 from renewable instruments. And that's an important element that's going to continue supporting the work ahead. And finally, attracting FDI in strategic clusters using the existing special economic zones, but also integrating the special economic zones with the local economy through backward linkages. This is key to be able to enhance the diversification in the domestic economy. Let me stop here, Tim. Again, as I said, Oman is a broad-based agenda in terms of the different pillars of the reform. I just wanted to highlight some key elements, but I'm sure that more will come to discuss.
Great. Thank you very much, Cesar. Before turning the floor over to Justin, I should have said at the beginning, please, if you're joining us online, put your questions in as soon as they come to mind. We'll get to those together with questions from the in-house audience once Justin has given his response. Better to get the questions in early rather than leave them to the last minute. So thank you. Justin, over to you and get your response to the IMF report and what Cesar has just outlined.
Thank you. I mean, my response is, Cesar, thank you for your insights, and you know, congratulations to all the team involved in the report. I read almost every IMF report produced on the region, and they're all good, but they can get a bit samey. But this has got a lot of really valuable insights and recommendations in. And also, you mentioned some of the selected issues papers, which often get ignored, but there were some really good ones there. You mentioned one on SOE reform. I think there's also one on transmission of interest rates, developing the local currency bond market, which is really important, structural reforms to improve productivity. So, yeah, I mean, really, it's worth reading in depth for anyone who's interested in Oman's economy. And it's really good news that the authorities now allow publication of the reports, which is not a universal thing in the region. And it's part of a trend of transparency we see in Oman, which includes the only regular monthly fiscal data in the region and kind of expanding data coverage. And it's part of the story of how Oman has made remarkable progress over the last 3 years, as you outlined, returning public finances to a surplus, reducing debt, and making really important structural reforms. And it's been encouraging to see how many of the recommendations from the previous Article 4 have been implemented in the subsequent year. And I hope the same will be the case for this year's report. But there have been some areas of slippage in fiscal policy, and there are other challenges that I'll touch on. But before I do that, I think it's easy to forget how far Oman has come over the last half century or so. At the start of Sultan Qaboos's reign, it was a really poor and undeveloped country with only a few miles of paved roads and 3 schools. And in the subsequent decades, there was a really dramatic renaissance that resulted in the UN naming Oman in 2010 as the most improved country over a 40-year period in its human development reports. And then in the 2010s, the economy soared even further with the oil boom, but spending got out of control with large twin deficits developing when oil prices declined in 2015 and 16. And financing those deficits caused government debt to surge, as you mentioned. In 2019, when I launched a research service for investors, my clients were worrying about a balance of payments crisis and a devaluation and a debt default, and the focus on whether the state could sell assets to cover its spending needs and maturing debt. The remarkable turnaround that we've seen in the last 4 years is thanks to long-term thinking, including the Vision 2040 and the development of a medium-term fiscal plan by Tawazun, and its implementation with strong support from Sultan Haytham, the finance minister, and the Secretary General in the Finance Ministry, among others. And while high oil prices have helped, the structural improvement of the last few years was made possible thanks to an increase in non-oil revenue and expenditure discipline. The underlying non-oil expenditure last year was on par with 2019 in nominal terms, whereas in Saudi Arabia there's been a 20% spending increase over the same period to kind of highlight Oman's achievement in an inflationary period. And there hasn't been a pro-cyclical spending boom with higher oil prices, and instead the oil revenue windfall, a lot of that's been put towards reducing debt. And in fact, the Article 4 report shows that the surplus in 2022 was about 3 times more than the official report, so 10% of GDP, because a lot of the revenue from oil was transferred to government funds off the balance sheet. So, very, very strong performance, and indications that 2023 was also quite strong, and the IMF is forecasting surpluses in the years ahead. And this has led to a really rapid improvement in credit ratings, as you mentioned, including a rare double upgrade by Moody's last year. And I think there's good reason to think that Oman could return to investment grade next year, providing the momentum continues. However, despite this, there has been some slippage from the medium-term fiscal plan. Underlying expenditure last year was about 9% above the target set in 2021 in the plan, and this year's budget is about 13% higher. And subsidies are a big part of this. The electricity subsidy phase-out deadline you mentioned is 2030. It was originally 2025, and I think you said that should be accelerated, and I hope it will be. And of course, the fuel subsidies introduced in 2021 have become a real burden. Meanwhile, non-oil revenue generation has been about 17% less last year than in the medium-term fiscal plan. And part of that is that the efficiency of VAT collection, which it sounds like is improving, and the delay of the personal income tax law. And it's good to hear that the IT system is underway, and that's going to move ahead. And that may not generate that much revenue initially, but having it in place is a useful thing for the government to draw on, and it will be a first in the region. I think traditionally Oman has followed on a lot of fiscal policies. It's seen what's worked elsewhere in the Gulf and has applied those things that seem acceptable. But if it does the personal income tax, it will be the first in the region to do that. Kind of a positive area is that core spending on things like civil ministries and defence, that has been quite contained, the spending growth. Relative to the medium-term plan, I think only about 6% higher last year. And then, of course, higher oil revenue has meant that we've had much better performance in that plan. But it would be really helpful if the updated plan was published. It hasn't been. And you recommend a kind of a regular process of including it in the budget cycle, and that would be very positive if that happens. Your fiscal forecast for surpluses over the next few years assume that progress will be made with subsidy reform. And I hope that the new social protection fund will make that more publicly acceptable. The fund, which was launched last month, it's important to mention, is a really welcome development and is also kind of a first in the region. And it's seen some rapid sign-ups for universal benefits, such as child and disability benefit. And while the fund's purposes are admirable, there's a risk that the cost of its benefits could be even higher than was estimated in the budget of about $1.5 billion or 5% of total expenditure. Restraining core spending and raising new non-oil revenue is important, but could get challenging as a lot of the easiest measures have already been implemented. And kind of another factor is that spending may be needed in some core areas. You mentioned the decline in infrastructure capex from the government, and that maybe needs to be reversed if Oman is going to achieve its kind of growth objectives. Let me finish with some comments about the outlook for economic growth. Oman doesn't currently appear to have that much capacity to increase hydrocarbon output, other than the gas from blocks 10 and 61. Its oil and gas reserves are much smaller than its Gulf peers, both in terms of the size of the fields and relative to population. And in addition, the geology and the geography in Oman makes it much harder to develop the oil fields. So while we'll get something more from there, it's not like Saudi Arabia or the UAE, where there's quite a lot of scope to increase if they want to, and that's another question, whether there's demand. But the non-oil sector does have some promising areas of growth, as well as weaknesses. I think the most promising sectors are those that draw on Oman's natural resources, including its location, so things like minerals, hydrogen, tourism and logistics. And there is some positive momentum in all of these areas, but attracting investment could be a limiting factor. Given this constraint, I think the launch of the Oman Future Fund, which you alluded to, is really welcome. And that's going to use some of the investment authorities' capital to come alongside the private sector and support strategic projects and SMEs. But there are some weaknesses. It's a concerning thing that the hospitality tourism sector hasn't yet recovered to its pre-COVID level, as it has in some other Gulf countries. And there's also been weaknesses recently in construction, as you mentioned, and financial services. And I think an underlying problem for the economy is what the report says is a declining total factor productivity. And there's a lot of things that need to be done in terms of regulatory reform and upskilling the workforce to improve that productivity long term. So I think there is a lot of scope for Oman to improve in the future, and it's come a long way, but there are some real challenges. So I think I'll leave that there, and thank you for Tim and Ambassador and the Institute for inviting me here, and be interested to engage with questions from the audience.
Thank you, Justin. I'm going to give Cesar a chance to respond to anything he wants to in Justin's comments, but maybe let me just emphasize two of the comments to sort of get you to comment on, Cesar. So one is, I guess in common with many GCC countries, we've seen this declining productivity in Oman over many years. Maybe you could say a little bit more about what you see is needed to begin to reverse that. And then the second area that's come up is, I think, where Oman is trying to expand in the non-oil economy is in very similar areas to what other GCC countries are doing, and whether this is, complementary across countries, or is it competitive across countries? And then if it is competitive, how Oman stands against, say, Saudi, UAE in trying to develop these new areas of the economy. Then within the room, if you have a question, if you could turn your name tag up, and then we'll come to your questions, and then we have a couple coming in online. Thank you. So, Cesar.
Thank you, Tim, and thank you, Justin, for all the insights. As I follow in the discussion, there are successes, but the road in terms of the work ahead continues to be relevant and long, and especially given the urgency, as you mentioned, while the Omanis have been successful in recovering what they have been extracting and preserving the reserves in terms of oil and gas, the cost will continue growing, especially under the energy transition ahead. And that actually calls for the need to accelerate reforms and being able to boost the non-hydrocarbon economy. No? Let me just touch base on a few elements. One is on the medium-term fiscal plan. This is being updated at this moment, and indeed we were very glad, as you can read in the report, that the authorities agree on the elements that we see important to be able to strengthen the medium-term fiscal framework, to make it transparent, to make it relevant, and prevent having a framework that in a year may become outdated in terms of the key targets that signal the direction of fiscal policy. So we are glad that they're committed to implement some of our recommendations starting the 2025 budget. No? And you may be aware, but this comes after extensive technical assistance that the fund has provided the Omanis precisely on the medium-term fiscal frameworks, but also on the budget process, including on execution. No? So hopefully we'll see some good developments ahead. With respect to the fiscal cost and potential risk associated to the new social protection, we have seen the details, and we have seen what it has been allocated for each different non-contributory program. And based in our assessment, they have been quite conservative in avoiding potential overruns down the road, but the risks are always there. This is something that they are monitoring now in terms of how many people are registering for the different programs, and what we're seeing so far is in line to expectations last year when the programs were designed. So we will continue monitoring these elements. With respect to CapEx, the authorities, they don't have plans to increase capital expenditures over the medium term. And when we see indicators of the quality of infrastructure, we don't see deficiencies in Oman. So it's more the need to preserve and maintain existing quality of the different infrastructure available in the country. And in some of the areas in which they see the space to do more investment, they want to tap into private-public partnerships. A new law, as you know, was put in place 2 years ago, and it's a good opportunity to bring also investments from the private sector in some key elements while monitoring all the direct and potential contingent fiscal costs, which is what the Ministry of Finance, there is a unit overseeing all of this. No? Just a couple of comments on hospitality and the financial sector. On the hospitality sector, this past year we saw it very, very close to pre-pandemic conditions. The impact or any noise coming from, or any spillovers coming from what has been happening since October in the region, it has not had any impact or major impact. So we see that the hospitality will continue doing well, and there are several projects related to tourism that again are being led by a specific public institution, UNRWA, but UNRWA is not investing in the process. It's overseeing the process, and it has minor stakes in those tourism projects. On the financial sector, we don't see any weakness. We see the need to continue strengthening the regulatory framework and supervisory framework, and we discuss those elements in the report. But as of now, and even during the turmoil early in 2023, the banking system has remained quite resilient. Profitability has recovered back to pre-pandemic levels, capital, liquidity indicators, all metrics remain in green and with sufficient buffers to be able to being able to adapt to any potential shock down the road. And finally, we do two questions, Tim, on TFP, and as you know, this is an element that is quite common in GCC countries. In our case, what we see is that there are three key elements that have been affecting TFP. One has been the labor market segmentation and the inability for labor mobility, labor flexibility, not only between public and private sector, but also of the expat community. So we are glad that some of the changes in the social protection law and the labor law, they will be supporting this mobility and flexibility. You know, for example, one key element that was a constraint before was the fact that there were differences in the benefits, pension benefits, for a private sector worker or a public sector worker. Now that the pension fund has been merged and has been unified under common parameters, then there are no really differences in terms of what benefits a new worker can secure in the private sector or in the public sector in terms of pension benefits, for example. Those are something important and relevant that we see contributing to labor market flexibility. And also some of the elements in the labor market law primarily supporting female labor force participation will be key in an area that is still quite important for Oman, no? Which is still female labor force participation. While it has increased over the past 10 years, it still remains low compared to regional peers. No? The other element that is important for TSP is still the high state footprint in the economy. No? And the fact, as I mentioned, back in 2020, OIA, the Sovereign Wealth Fund, inherited 160 institutions that are being in the process of enhancing performance, enhancing governance, and making sure that they are sufficiently mature to be able to be put into the investment plan. This is an area that needs to continue with more transparency, more accountability. We are glad to see that for at least the top companies in Oman, several of them has started to publish financial statements, and there's more scrutiny on understanding their assets and liabilities, and also understanding whether actually their debt, if increasing or decreasing, to what is really related. Just to give you an example, I mean, most of the SOE debt right now is in hands of the downstream oil and gas company, OQ. But OQ, as you see its metrics, and you can see that in the report, it's in a very strong financial position. You know? So even though the debt primarily is due to them, their capacity to be able to pay the debt is strong and give us more indication on the SOE sector overall. And finally, with regard to competition, I think that Oman is not there in the GCC region to compete with other regional players. I think that Oman is trying to position themselves and integrate in the overall developments that we are seeing in the region, both in terms of the key to enhance green investments that are key for them to be able to develop new sectors. For example, as of now, we see quite important investments in green steel, in companies that are being right now ensembled in a way that they can use natural gas and can be immediately switched to hydrogen once hydrogen is available in the local economy. So these type of sectors will be critical to further enhance the diversification in the economy, but also in tourism. You know, tourism is an important element in Oman. Oman is very different in terms of what they can offer compared to what the UAE or Saudi can offer. So I see it more as a complementary, in the sense that you go to the UAE, you go to Saudi, you go to Riyadh, but also you can go to Oman and have a different type of experience in an overall package, and potentially facilitated by what we're seeing these days in having a common GCC visa across the region. Let me stop there and see if there are any additional questions.
Very good. Thank you. So, see, you have Kristen, I think, with a question. Can we have the mic over here?
Hi, so I'm Kristen Diwan. I'm a scholar here at AGSIW. I want to thank you all for really putting a lot of meat on what we're hearing as really good news out of Oman. I think, that's been kind of the story that I've been hearing. The top line story is, wow, they're really moving in a good direction. And my question is, when I speak to Omanis, this message I get is different. I'd say they're pretty negative, quite pessimistic, not like in a crisis level, but negative. So what I wanted to do is try to get you to branch, to figure out how we could understand that by bringing some of these numbers onto a human level, like what it looks like for Omanis. And through that, I think some of it would be cuts in subsidies, perhaps might be one thing where they're feeling that. Also, you talked about the rationalization of the fiscal sector. If we take that from kind of economic language, I think most fiscal spending is probably on wages. So what's happening to wages of Omanis? How are they kind of experiencing that in the public sector? And anything else that just comes to mind, because we know issues of employment are a big deal in Oman. It's one of the states where we've actually seen labor protests, I think as recently as 2021. So it is an issue that the government has to keep a really sharp eye on. So through all of these changes, I know the idea, of course, is to increase jobs, increase private sector jobs. But if I can just get more of a sense if that's happening and how that's being experienced by Omanis. And if I could ask just one follow-up question that I think is related. I'm really excited to hear that you have a special report on SOEs, because this is something that's been like, I've been hearing about this forever in Oman. In fact, I was just looking before this talk, and there was like stories from 2018 that they're going to be privatizing at least 35 or something SOEs in 5 years. And then in 2019, same thing. 2020, same thing. So 5 years. So it's not happening. So I'd love to hear a little bit more about that SOE privatization element, and also what that would look like for Omanis. Because normally I think when you privatize, again, those will be, I would imagine, kind of loss of private sector jobs. Would that be a fair projection of that? And so how the economy is going to be able to deal with that in terms of employment? I'd be very curious. Thanks.
So before you answer, Kristen, there's a question online which I think fits in nicely with this as well. It says, can you talk about the positioning of Omani workers to fulfill some of the future jobs, as well as whether Oman is set up to have job growth while also safeguarding labour rights with that growth? Which I think in the first part of Kristen's question fits in.
Very good. Well, it's a very comprehensive reform agenda, and there are losers and there are winners. But it's also one that calls for a change in the mindset of the population. Clearly, Oman is venturing into making the private sector really dynamic and being the driver of the economy of the future, which clearly requires a transition away from the status quo, away from the public sector jobs that were the expectation of generations in the past, towards creating the incentive and enabling Omanis to venture into the private sector, which when we see in the past decades, we didn't see it. It was very limited. It was primarily the expat community working in the private sector, which is one of the additional elements bringing down productivity. As I mentioned before, there are some enablers that were needed and some constraints that were hindering that mobility and ability to move from the private to the public sector. But also the fact that as I mentioned before, that the non-hydrocarbon economy was driven primarily by public sector investment. And the opportunities across different sectors and across different types of jobs was not there. Now we see a more dynamic private sector emerging from the different shocks of the past years. And what we have started to see is that the share of Omani employment in the private sector, in total Omani employment, has started to increase in the past 3 years. Now, we want to see more of this, and this is going to help with this negative perception that perhaps the reforms are not helping Omanis. What we see across the fiscal, across the structural developments is that they will help, but it's a process. And we see some elements giving us the confidence that it's moving in this direction, but again, it's not going to happen overnight. And accelerating some of these enablers to be able to enhance investment on all these different sectors that are critical to enhance the non-hydrocarbon economy are important. No? The cutting of subsidies has not been done in a way to hurt the population. The Omanis have been quite vocal that the process was going to come together with enhancing the social safety net. And what they have been able to do with this new law, which is in place starting this year, is precisely being able to compensate, especially for those that could have been in a vulnerable position and been affected deeply by the subsidy cuts. And moreover, their approach to subsidies, which we see the need to accelerate, is more gradual. And we see the need to accelerate because precisely the tools to be able to protect those that need to be protected are in place. And not doing that, not accelerating, is not reallocating resources that can be used for different purposes. On SOEs, indeed, in the past, these were plans. But we are happy to see that these are being put in place. The process is moving slowly because the way they are taking, the approach they are taking is primarily to avoid hitting the population with a sudden privatization of an institution that needs to be restructured and reorganized by the private sector. And the way they are doing this, asset sales or privatizations, is only going ahead with those that are mature enough to be able to attract good investors that can simply extend the life and expand the life of these SOEs, while not creating those disruptions that could be generated by a sudden privatization. So that's why I mentioned that in the pipeline there are 20 assets to be divested. I mentioned the OIA inherited 160. But only 20 are seen mature enough to be able to put out there in the market without generating disruptions, but actually enhancing and empowering the private sector to move ahead with these assets. No? And back to the question that you mentioned, Tim, in terms of the workers and the jobs of the future. This is something that we touch in the report, no? And the need to expand to consider dual education in which skills can be targeted to those needed in the economy and especially in the sectors that are being developed. No? There are different clusters that are being developed inside and outside economic zones, but also in industrial cities that need some specific skills. What we're seeing is the vocational training programs and the different aspects to support re-skilling, upskilling for workers can support this process. And we hope to see more of this in the future.
I'm going to ask Justin if he has anything to add on this, but I want to throw in another question which is on a similar topic that's come in online, and it's the acceleration of Omanization is certainly helping to reduce unemployment. but isn't it threatening to derail attempts to attract foreign investors who want to have foreign employees with international know-how to come into the country to work in their companies? So I know, Justin, you can take a stab at that and anything you want to add on Kristen's questions.
Yeah, thank you. So there is a mystery in Oman's employment data, which is that yes, there's increased Omanization. There are more Omanis working in the private sector. At the same time, the expat population has been growing really strongly. Yeah. I think the most recent data was about 10% year on year in November, and it's grown well above where it was before the pandemic, whereas other Gulf states have maybe recovered to pre-pandemic levels. Oman is hitting new highs. So it's not entirely clear, what's driving that or where all these expats are working, but there certainly seems to be scope, at the moment at least, for creating jobs for Omanis and bringing in expats. So, I mean, I think it's always a challenge in terms of attracting foreign investment, but there seems to be labour market flexibility, and with the new labour law that Cesar mentioned, I think there's scope to do both at the same time, providing the economy can keep on growing. And in terms of, Kristen, your kind of question about the sense of pessimism that you've heard, I mean, in some ways we often hear that here in the US as well, even though a lot of the economic indicators and employment indicators are saying things are really good, but people don't necessarily feel that. I mean, particularly when you've been through a period of inflation. I mean, I think in Oman, maybe this social protection fund will help give people a little bit more confidence and stability. And certainly, as employment improves, that will help. I wanted to mention a bit, Tim, you asked about the issue of the old issue of competition between Gulf states, and inevitably diversification strategies in the Gulf states often focus on similar sectors, and they're ones that make sense, and there is some competition. And I mean, one of the new sectors is hydrogen, and there's very clear competition here. Particularly Saudi Arabia and the UAE are also developing hydrogen. Oman has got very ambitious plans, but it has a challenge in that whereas, Saudi Arabia, you have PIF, UAE has got Mazda and others, there's a lot of local capital. Oman really needs to attract the foreign investment to move its project forward. And it seems to be making good progress on that, but and it has some kind of specific advantages in terms of its geographic location and land availability and so on. So hydrogen could do quite well. But yes, there is definitely competition there, and it remains to be seen whether the market is big enough for all of these countries to expand. But if 15% of the world's energy is going to come from hydrogen at some point, then maybe there could be. I think in some other sectors, I mean, tourism particularly, there is complementarity, as you said. I think there's a unified GCC tourism visa hopefully coming in soon. That could really help Oman. And the better links with other Gulf states, more flights, the railway that is now being built between the UAE and Oman, that could help drive tourism. People coming for conferences and city breaks in Dubai, come over to Oman for a few days of hiking or whatever. I think there's scope for Oman to benefit from that, and I think it's part of also a kind of a broader trend of cooperation in the GCC, which has not always been the case. So you're seeing a lot more Saudi and Emirati investment in Oman, which is positive, and also the sort of the trade and transport links. There's the road, the border crossing that was opened with Saudi Arabia for the first time a few years ago, and they're developing a sort of a shared industrial zone on the border. So these are some ways where, although there is competition, there is cooperation which I think could benefit Oman as the GCC develops.
Let me just wanted to put two questions online, just on the table, which follow up from what you've said, Justin. The first is one is asking about the significance of Saudi and Emirati investment in Oman. I guess if there's any information about the size of this and where it's going. And then the second one is, the challenges in Oman of developing its gas infrastructure, like its GCC neighbours have done, both for domestic and export markets. If either of you could comment on that. And then we'll come, I see, a question from Omar and a question over there. So, do you want to go first on
Yes. I think, the investment is coming in quite a few sectors. It's early stage. I think the Saudi PIF has set up an Oman country fund, and I think they've allocated $1 billion to invest in that. I'm not sure what the time frame is, but they've already made some initial investments in infrastructure, the infrastructure fund alongside the Oman Investment Authority. There's talk of kind of tourism investments, possibly petrochemicals. There are a number of sectors where kind of Emirati and Saudi investment is coming in on top of the long-standing Kuwaiti investment and Qatari investment. So that's certainly helpful because, as I mentioned, Oman has a challenge attracting the capital to advance its growth potential. In terms of gas infrastructure, Oman has done quite a lot in building out the infrastructure. But again, it relies on foreign investment. So, for example, there's a project to do LNG bunkering, which is going forward. But there was another plan to use, I think, gas for blue ammonia, which maybe hasn't got finance. So, I think it's a challenge.
Okay, why don't we take a question from Omar and a question from Alia, and then take both of them, and then we'll come back for the responses.
Thank you. Omar Al-Hinaya, I'm a graduate student at the University of Maryland. I just had a question about the structural changes and governance reforms that we talked about earlier. We didn't really touch much about the change in governorates in Oman and the role that governors play in driving the growth and development, especially with small, medium enterprises, and driving the youth towards the non-hydrocarbon sector. But maybe you could enlighten us on that a little more if you've covered any of those areas. Thank you.
Let's take the question over here.
My question was, given that Oman has one difference between the other Gulf countries, maybe with the exception of Saudi, is that they have more agricultural land. And I'm wondering if diversification includes agriculture and how that's going to be possible while still maintaining a low hydrocarbon footprint.
Maybe Cesar, I'll go to you first.
Yes, I can give it a shot. We've been looking at SMEs, and most likely this is an element that we will continue working and expanding our understanding. But we are looking from the perspective of what is hindering its development. We had different discussions with, there's a public institution monitoring on the developments of SMEs in Oman. And what is interesting to see is that on the data that is available is that not many SMEs are able to continue growing and move out of the SME name. And there's a lot of many SMEs that exit from the market. So we were trying to understand more about what are the factors that are affecting SME performance. And one element that is quite there is the inability of securing funding. This is an element that the government is looking in more detail in the new financial development agenda they are trying to implement. A few weeks ago, they have launched the program, and they are looking at different mechanisms through which they can support SMEs. And one of them is the Future Fund, which has a capital of $5.2 billion, 10% of which is expected to be dedicated to support projects for SMEs. With respect to agriculture, one important cluster in the south of Oman, in Salalah, is precisely food and fisheries. And it's expected to provide infrastructure and logistics facilities to be able to enhance the the value added in the production of agriculture in the region. That's what we know so far.
Anything to?
Yes, I mean, I think Omar, in terms of developments in the governorates, I think this has been one of the areas Oman has made an effort. I think there's a danger. There has been a danger in the Gulf states to focus development so much on the capital city or maybe one or two industrial hubs. But Oman has been trying to develop out other parts of the country. Duqm is one example as kind of a greenfield port and industrial zone, and I think Sultan Haytham was recently in Musandam, where there are in the north, where there are again efforts to develop the local economy. So I think while inevitably there is some concentration of investment and growth in a few places, the government does seem to be focused on kind of spreading growth around the country, which is really important. Yeah, and in terms of agriculture, I mean, food security is such an important issue across the Gulf, and Oman does have some of the land and water resources, albeit still constrained, but it does certainly have some. So I know it's a priority of the government to develop those and perhaps supply also some of the other Gulf states.
Let me just take a couple of questions online and then we'll come back to in the room. So I'm going to roll two questions in together. The first is on SMEs, and it says many funds were created to support startups and SMEs, but the majority of these startups are failing. After they receive funds, they're left to their own devices. So what more can be done to support SMEs? And then relatedly, says the business community in Oman is also pessimistic about private sector growth prospects. What can Oman do to stimulate domestic investment in the local economy? Maybe I'll turn to you, Cesar, first again.
Well, as I was saying on the SMEs, this is exactly what we've been seeing in preliminary analysis. That many fail, and only few are able to continue emerge and grow through its life cycle. That depends on the sectors in which they operate. Some sectors, primarily services, tend to be more successful. But again, we see this as one of the elements that were hindering SME growth in the past. And as I mentioned, in the past, non-hydrocarbon growth was primarily driven by big public investment projects. SMEs did not get access to those projects. Before, when domestic companies, or any company were trying to secure a procurement a project with the government, it didn't have the capacity to provide that opportunity to SMEs. Now, what we are seeing is that with the digitalization of procurement, for example, now all SMEs, without paying fees, they are able to participate in the process of procurement. And some nice experiences have been emerging into providing some space and some SMEs actually participating in this process. So we hope that this is something that is going to help. Now, likewise, when we have been discussing about economic zones, there are different clusters and a lot of industrial activities taking place in these economic zones. How they can help in support SME development. And what we're seeing is important work in trying to have some SME incubators and some in ways that can help them see specific channels that can ensure connection and integration with the value change that are taking place in these economic zones. This is very recent, something that we have started seeing in 2023, but we see very promising in how leveraging those investments in economic zones, but making sure that some of the value change can be integrated to the local economy, primarily SMEs. So that with respect to the SMEs. In terms of stimulating domestic investment, again, if we look at credit provision in the country, and we look the extent of the growth in credit to the public sector, that was quite high in the past years before the pandemic. And again, that was reflecting the fact that the SOEs, they were not performing as well. They needed more resources, that there were a lot of demand for moving ahead with different public sector projects. Now, that is changing. I will see that the growth of credit going to public sector institutions, while it's still growing, is much less than what it was observed in the past. And in contrast, what we're seeing is that credit remains dynamic to the corporate sector and to several corporates. That is something that is going to help stimulate domestic investment, not only because it's not going to crowd out credit as it was in the past, or making credit less available, but also because the fact that the state is less present in terms of what are the different drivers of the non-hydrocarbon economy provides the space for the domestic private sector to get in and being able to participate in different projects.
Okay. Let's go to Mohammed. You had a question?
Yes, my name is Mohammed Al-Mutairi. I'm a research associate here at the Arab Gulf State Institute. So regionally, we see that there's lots of tourism initiatives, and I know that tourism is a big factor of domestic revenue for Oman. So how has, my question is, how has foreign direct investment and tourism investments domestically within Oman been prioritized as a form of fiscal policy or financial revenue for Oman?
Tourism is clearly a key sector that will play is playing an important role, but it will continue playing a bigger role in the years ahead. UNRWA, which is the public institution and the Oman Investment Authority in charge of promoting the development of tourism in the country, is working hand in hand with the private sector to develop different type of infrastructure targeting different type of tourists. In the south of Muscat, for example, there is a big project. I don't have the name in mind, but it's a circular investment that is going to leverage the availability of renewable energy in the area, the capacity to provide a green experience in tourism that is expected to provide a boost to certain segments of the tourism, the tourists going to the country. No? Different hotels are being also built around the area, and we see significant scope for further expansion. Land is available. The attraction to the different possibilities of tourism activities in the area, being in the south in Salalah, being in the south of Muscat in Sur, those are activities that can help bring more tourists in the future.
Justin, I'm going to give this question to you. That's okay. So, question about the when will Oman be in a position to pursue counter-cyclical fiscal policy?
I mean, arguably it is pursuing counter-cyclical fiscal policy. I mean, that's one of the great successes. It's not, entirely the case. I mean, so, there was quite a large increase in spending in 2022, but equally they're relative to other states in the region, they've shown quite a lot of discipline. So, and they're building up some reserves so that, yes, well, if we get a decline in oil prices, then, maybe they can, they will spend down in the next cycle to support growth. We'll see. Yeah, I mean, I think that's definitely a success. I mean, unless you disagree, or.
No, I fully agree. Back in 2020, I think we could have said that they didn't have the capacity to implement any countercyclical policy because they didn't have any policy space. Now they have some policy space. That certainly we are. What we have in mind is a temporary shock. It's not the 2014, 2015 lengthy shock that could derail the situation as it was in the past. They have capacity to be able to implement some countercyclical policy at the time of a potential shock.
Yeah, and I think that this goal of getting debt down to about 30% of GDP is designed to give them some fiscal space so that if they need to borrow at some point,
exactly,
they can do so, at reasonable rates.
Exactly.
Yes, please.
Hello everyone, this is Abdul Rahman Rawahi from the Embassy of Oman. First, I would like to thank Ambassador William and the team here at the Institute for this great opportunity as well. Thanks to our distinguished speakers. I just wanted to ask if you could maybe talk more about where Oman is in terms of attracting foreign investments. We know that has been a main goal in the government, and if we could talk more about how has it been recently in the previous years, and what's the potential or challenges in this area. We've seen recently the Sultan Haytham made important visits to Singapore and India to expand these trade relations, and as well the current free trade agreement between Oman and the US, and how can that play a big role in this? Thank you.
We have been surprised on the positive side in terms of our expectations on FDI in 2023. I don't have the numbers up on my mind, but FDI has been more dynamic than initial expectations. Now, while we do see some investments coming to non-hydrocarbon sectors, and this is more something that we have started seeing in a more dynamic way in 2022 and 2023, still the bulk of FDI is in oil and gas. And this is primarily where the country is working in how preserving the flow of FDI while shifting its composition into generating the opportunities to bring into these clusters of petrochemicals, pharmaceuticals, food and fisheries, and all the different areas that the country is targeting and see comparative advantage in developing. No? We see all the different work on enabling FDI in these sectors to pay off over the next years. But as of now, it's still the case that we continue seeing oil and gas dominating the FDI component in Oman.
Justin, anything you want to add?
Yeah, I mean, I think it's, we had the Q3 FDI data out recently, and as Cesar said, it is the same story of concentration in oil and gas, but there is some diversity in terms of the countries that are investing in Oman. As I said, Saudi Arabia has investing a lot more than it was in previous years. A lot of investment from the UK and other sources. So I think Oman has an advantage in that it's a politically neutral country, has relations with a lot of countries, and can potentially attract investment from a wide range of sources. There's even been talk in the past about Iranian investment in Oman that hasn't quite reached expectations. But I think there's certainly a scope. But I think a mixture of the US, Europe, India. The Indians have invested a lot in the past in things like fertilizers in Oman. I think there's more scope for that, and the Gulf states itself. So there's some progress, but there's a lot of potential to achieve.
Okay, let me ask one more of the questions we've had come in online before we wrap up, and that's does Oman's size relative to other more populated countries give it an advantage in terms of its speed of execution of policies? And in this regard, can you see it being a torchbearer for other countries in the region in the development and use of future technologies?
That's an interesting question.
It's an interesting question. Cesar, can you take a stab at it?
Yeah, I don't see that its size it's either advantage or disadvantage. I think it's primarily the fact that there has been a clear decision to move ahead with a comprehensive agenda, which is reflected quite extensively in Oman Vision 2040. I think that it is primarily the case that before the pandemic, there were some different elements that were hindering the private investment, that were hindering the flexibility in the labor markets, that were hindering the ability for Omanis to venture into the private sector. No? Those, more than the size, are the key elements that can help drive the economy of the future. No? And what we have seen in recent years with different laws that are trying precisely to remove some of those constraints hindering the development of the economy are the key elements that will help ensure seeing results in the economy from all these policies that are being executed. No?
Last word?
Last word is everyone loves Oman. I think anyone who spent time in the Gulf, recognizes the warmth of the Omani people, and it's really encouraging to see the country, making progress fiscally and economically, and with the IMF support, I think hopefully we'll see much more to come in the future.
Very good. So just leaves me to thank Cesar and Justin for a great discussion, to thank everybody who came in person. I would say it's very nice being back in person doing an event, but thank you everybody who also checked in online. We have a lot of questions. I realise I didn't get to all of them, but we got to quite a lot of them. So apologies if I didn't get to your question, but let's remain engaged on Oman and the GCC. I think Oman is a fascinating story, a lot of reforms going on, and I hope the discussion here has done justice, I think it has, to the exceptional reforms that are going on. So thank you.